Hey everybody, thanks for stopping by to watch this very important presentation of how to recession proof your career and protect your career and your finances. Of course, we have had the most incredible market crash that we have ever seen in these United States in such a short period of time here in March of 2020. And this presentation is just to help you decide which way are you going to go during these times. Hello, my name is Joe Gonzalez, and today I'm going to show you some of the things that the financial experts are looking at, and the coronavirus has exposed the raw underbelly issues in our economy. Hi, I'm Joe Gonzalez, and I'm just like you. I just wanted to tell you this story because today feels much like 12 years ago. At that time, after 20 plus years of working in the corporate banking and the commercial real estate industry, and my wife was in the small business world, our world came to a crashing halt during the financial crisis in 2008 to 2010. And after working so hard, feeling like we had it made, we lost much of our life savings, and I was stressed out and depressed. It was a horrible 3 year period. I remember people, including me, walking around like zombies, and it felt just like today. And during that time, we decided to write down our own goals. We knew we wanted to chase our dreams of sunshine and happiness, health and wealth. So we decided to take control of our own lives. And today, as I write this, President Trump just extended the social distancing guidelines to April 30th. And that's really incredible when you think about it because that's at least 60 days from now. And I personally just don't know how the small business owners and real estate and other self employed people that don't work for the big companies are going to make it through this time frame, really, for what I think is going to happen over the next year or so. But disclaimer, this presentation is not to be taken as financial advice. These are simply my opinions. I'm a former commercial real estate lender, broker with 24 plus years in the corporate financial and commercial real estate markets and CMBS debt markets. I am not a licensed stockbroker or financial advisor, nor do I have a current real estate license. What we're looking at here is a Dow Jones Industrial Average chart from 2003 up till 2019. And this is just to show you where the market went. And the reason why I want to show this chart is I really want to highlight, like I said, what I was talking about in 2007 to 2009 timeframes. This back in 2007, where the first arrow is really representing the height of the market, but also that is when I was a corporate lender, and I can tell you this is when the events started because I had done 400 million plus that year, and we could not sell our mortgage debt. There was a liquidity event in the market, and the markets just froze up. When a liquidity event happens, that means lenders cannot sell the mortgage debt, and there are no investor takers in the market. And when that happens, the markets dry up and people stop doing business. The credit markets are just an incredible indicator of what is going to happen in the market. And then the market might have went up a little bit and then it started coming down. And I just wanted to show you that it was some months later, I think it was like September of 2008, I believe, when Lehman Brothers actually went out of business. And that just was an historic event. But that was still about a year later from after it started that happened. And then it was another close to a year later when in 2009 when we hit the bottom of the market. So from the time the market liquidity event started to the bottom of the market was actually about 18 months. And then I want to show you here is that from this market point in 2007, getting back to whole was up until almost 2014. So it was almost a 7 year period to get back to where we were, which is just incredible. So it was not a short-term event, and that's why I want to talk about with what's going on today so that you can protect yourself as well. And what we're looking at here is again the Dow Jones, but it's updated to 2020. This goes back and this shows you that we have just been on a steady climb other than a blip in 2019. Of course, I think that we did some lowered the tax rates, and then the company started just buying back their stocks, and it just started going crazy, and then we just had this big drop. Now, uh, due to the recent events, the coronavirus, etc. But there are some underbelly issues that people are not really talking about, and that's going to cause our market to either go down or it may go up. I'm not saying which way it's going to go. This is for you to make sure that you draw your own conclusions and do your own homework. But I wanted to just show you some more information to help you decide. This is the historical 10-year to 1-year spread on Treasury yield chart, and what this really means is this is a chart where 0% interest rates, and right now we're basically 0% interest rates, and a lot of people think that's good, but it's really not good because that's just a sign of what is happening. And this chart actually predicts that the last 7 recessions have started after we hit 0 on these interest rates. And I can tell you that I lived through the 1990 recession, the 2000 with the dot-com bubble burst, and then of course we had 9/11 in there at some point, and then we had in 2008, of course, and then right now is the most recent time, and that happened just in March in the last couple months, that we hit this 0% mark. And again, that has historically predicted the last 7 recessions. Now, here are some of the recent headlines that this is from the Federal Reserve president. I think he's from the Kansas City market, I believe. And the Fed official warns of 30% unemployment. That was March 23rd, 2020. That is just unprecedented. Just to give you an idea, the highest unemployment hit in 2009 was 10.2%, which is the highest since 1983. And then the stock market lost 50 some percent of its value in 2007 to 2009. So this just goes to show you, I know we had unemployment hit 3.2 million claims in 1 week, the highest week ever on record. So what's possible is just incredible here. And Governor Newsom has already stated that big banks agree to defer mortgage payments in California for those affected by coronavirus. This is huge that the banks are already saying, hey, we know this is going to hurt people. We're going to start accepting and deferring some payments. Now, here's what I want to talk about now, the credit and the bond markets. A lot of people just talk about the stock markets and the ups and downs, but if you're a lender and if you're in the markets, you know that the credit and the bond markets are actually bigger, and they determine the liquidity, as I was talking about. If the liquidity is freezing up, that means if there are no takers, no investors for the bonds, the CMBS or the MBS or any of the corporate debt, if there's no takers in the market, that means the credit market's starting to tighten up. And then they can't issue debt, and our whole world is based on debt, and banks basically freeze up. And when that happens, when banks are not extending credit, that means they're pulling back credit, and that just means that everybody is going to freeze up and nothing will get done. So you see here, credit market signals the U.S. risk heading towards a financial crisis. This is March 2020. Markets are looking to the Federal Reserve, and here's another one. The coronavirus is making the weakest parts of the U.S. corporate debt boom wobble. Analysts say brace for things to get worse. That was back in February, so they knew this was happening already before the virus hit. Now we have a health impact that affects everybody, and on top of the worsening credit market. So this is just couldn't be worse in terms of timing for everything coming together. Tom Barrack, he's the head of Colony Capital, a mortgage REIT. He warns on the collapse of the commercial mortgage market. He's the CEO of Colony Capital. The mortgage bond sales flooding the market, sparking pleas for help. This is again March 2020. Dead deals slash prices. Coronavirus drags down Southern California homes, and then mortgage firms struggle to meet margin calls as market turmoil continues. These are the things that we don't know yet. We haven't heard too much in the market yet, but these are just leading indicators of what is happening. And here we see that Zillow is terminating closing contracts, citing coronavirus concerns. Now, the reason why I put this here is Zillow is just an incredible source of data points. So they know what is happening in the market. And Invesco Mortgage Capital, another mortgage REIT unable to meet margin calls. Fannie Mae, Freddie Mac will let borrowers face hardships, defer 2 months of mortgage payments. And what does this all mean for you? What will you do to take control of your life? You can see this may go on for 12 months. It may go on for 18 months. I don't know. It may go on for only 3 or 4 months. I don't know. But we know this, we can't control the market. The only thing we can do is we can control what we do ourselves. And so what I wanted to do is just bring this opportunity to you for those who are serious about being their own boss, those who want to take control of their life. I want to show you something of how to be your own boss on a shoestring budget and give you a step-by-step blueprint for you to create your own destiny with a few hours per week. We have consumable products in the health, wellness, and natural health field, including a new weight loss products, which, by the way, I need to get holed up and you start eating the junk food. I don't know how many else are like that, but that was me. People buy consumables over and over again despite the economy. So this is really a plan B option that I want to talk about just because we can't control what's going on in the market, and to help you diversify your income and what I call recession proof your career. We don't know what's going to happen, but if we have cash flow to level things over, that's obviously what we need. We don't need a job, we need cash flow. And why this might work for you? Well, professionals have networks of people already. They spend years cultivating relationships and calling on people and customers. So you already have a network of people around you. And as they say, your network is your net worth. Um, Professionals have sales training. They know how to prospect and they know how to call on potential customers. Been doing that for a while now, I'm sure, if you're a professional in the sales field. Number three, professionals know how to follow systems and processes. And realtors are even taught how to use scripts and know what to say to people. And that's basically what we do as well. Number four, you can do this on a part-time basis in your spare time while the market is down to diversify income and create another stream of income to protect against any prolonged downturn. Number five, you understand the power of residual income and investment and passive income. This is what a business is, and some people might be in real estate or investment real estate. That's exactly what investor real estate is. And number six, as I say, recession proof your career. Build something outside of the financial markets or real estate industry and within consumable products. You saw what happened when toilet paper all sold out. People buy what they need over and over again. No matter what is going on, you need to have what you need for consumables, and health is wealth. So again, I'm going to give you this opportunity to click on a link below to watch the next step, to be your own boss, to transition or supplement your career. I'm going to give you a step-by-step blueprint on a shoestring budget. So click on the link or somewhere around this video. Thanks for listening, and I look forward to helping you with your next steps to taking control of your future with the affordable franchise system to help you recession-proof your career. Thanks for listening.